Hey, I'm Jeff Reber with Pursuit Real Estate here with Chad Hauseman from First Down Mortgage, whom we've done business together. Super excited to have him on the podcast, videocast, whatever we want to call this. So Chad, tell us a little bit about both yourself, how you got into the business, and then what's going on for First Down Mortgage in 2025.
Awesome, Jeff. Number one, thanks for having me on. Really appreciate it. Love our partnership with you and your team. Yeah, Chad Hauseman, owner of First Down Mortgage. This is year 23. For me in the mortgage business. So year 5.5, we opened First Time Mortgage, Whitney and I 5.5 years ago. So left, transitioned, corporate America, PHH, Bank of America, Ditech, and wanted to get into the broker world to have more options. And I call it my spider web, more options for borrowers. So yeah, it's been a great, 5.5 years, went through COVID, and then we've been through the up and down cycle of mortgage rates. So in 2025, we're in a good market, which is great. So born and raised outside of Philadelphia. I moved here and played college baseball, came in 1998. So you can tell I'm getting a little old, right? So mid 40s, played college baseball and played a little bit in the minor leagues with the Angels. And then just fell in love with Jacksonville. So I've lived a lot of places in Jacksonville and found my home 11 years ago in Ponte Vedra. So my office is here, raised my kids. Kids went through Ponte Vedra High School. I got one son at Florida State, senior at PV, going to go to JU to follow my footsteps to play college lacrosse. And then I have a freshman as well. So cool. Been married for June will be 20 years. Dated my wife Stacy in high school. So been together for almost 30 years. So it's a long history in a relationship.
Do you have any big, we didn't talk about this pre-recording, but big 20-year plans that you can release to the public for your anniversary?
Not yet.
Under the radar, so okay.
Yeah, our summer schedule is brutal with sports. We got to travel to Delaware. We got to travel twice to Delaware, once to Philly, once up to Connecticut. So we're going to do a little trip in Connecticut. But the plan is once we come back and breathe in August, we're going to take a trip and hopefully a cruise, since when we got on our honeymoon, we went on a cruise. So we're hoping end of August, September is when we're going to be our cruise too. So
okay, nice. And then on the mortgage side of things, in layman terms, for somebody that maybe isn't as familiar with, when you say, I was in the corporate world, BOA, PHH, Ditech, whoever, and now I'm a mortgage broker, give us like the differentiation between how banks and large corporations operate on the mortgage side of the business versus a mortgage broker. What are the things that you have that are an advantage to someone borrowing as a mortgage broker that maybe some of the larger entities don't?
Yeah, just the easiest way to explain it, I got more tools in my tool belt, right? Yeah. So I have an extension of different lenders, different underwriters. So when you work in corporate America, you work with one bank or one lender or one institution. So you follow their guidelines, their overlays. Here we have, if a client comes to me with a unique situation or maybe unconventional is a good way to look at it, Jeff, we have an ability to reach out to multiple lenders, multiple account reps to see if it fits their, if it fits their needs, fits into their box to do it. So working in that corporate America for, 15, 16 years, it was great. Loved it. I learned a ton, but I really wanted to have more tools in my tool belt to have the ability to help more people as well.
Yeah. Well, and to use an applicable metaphor for the conversation, it's like a pitcher in a baseball game, corporate America. They have just a fastball in their arsenal, and maybe they've got a great fastball. That's good, but mortgage broker, you've got more pitches to throw curveball.
This is it. Yeah. So
you've got more.
It was an adjustment coming from the corporate to broker world where it's not as strict on some guidelines, but you have to know where to look and where to go. So it's been great, man. It's been a great run. I got a very small team. There's 8 of us total, and I love it. I come from a coaching background, so to be able to originate, mentor, and also coach is really, really one of my passions to do. So we're not going to be a very large company, but I like the ability. We're small, mom and pop shop is kind of what our niche is. But I also, coming from a corporate America, where the individuals, the customers, they're a number. They're not a name. So here we can do less volume and we can be more specific to their needs. Text messages, phone calls, follow up. I will tell you though, coming from corporate where you're working that 9 to 6, 8 to 5, as you know, Jeff, as a broker owner, like you work 6:30 in the morning.
There's no off switch. Really.
There's no. So it's 6:30 to midnight. You're texting and your spouse, your kids are looking at you like, "Are you really doing that?" I'm like, This is part of the job. So
it's got to happen. Yeah.
You go self-employed. It's like, oh yeah, you can do this, you can do that, but you tend to work more. But clients do like that. Your mortgage is typically your biggest expense. So being able to have somebody at your fingertip that you can reach out to and connect with whenever you need to is pretty much what we value our relationship on.
Yeah. And so part of or maybe the primary reason we're having this conversation today is because the market has changed in 2025, especially recently. While mortgage interest rates have more or less stayed the same for the last, year and a half or two now, we've hovered in the 6 to 7-ish range. The amount of inventory, specifically in Northeast Florida, that we have has gone up, but the number of buyers purchasing those homes has stayed either flat to slightly declining, which means in my world that buyers may have a very good opportunity to find the right home for themselves, whether that be primary, secondary, investment property, whatever. So I wanted to jump into kind of where you see on your side of the business buyers coming, from what type of buyers and how are they taking advantage of this market?
Yeah, absolutely. So in the last 6 years, we've seen a shift from seller's market. Now we're really into a buyer's market.
Sure.
You can tell me more than anybody else. The average house on the market is probably over 45 days, 45 to 55 days.
It's double last year. Yeah.
So what I tell your buyers, we're dealing with more first-time home buyers, people who are relocating. You have the ability to get a better deal, seller concessions, 2-1 buy down. So there's a lot of things that we're offering for buyers at this stage, which is great. So
define your terms real quick for those that haven't heard that before. So seller concession and 2-1 buy down, define those for us.
Yeah. So seller concession, I would say probably, as right now, I do a lot of purchase business, is 80 to 85% of my buyers are getting concession. So 1% is going to be 1% of the purchase price. Mm-hmm. So on average, we're probably in that 2 to 3% range where the buyers are able to get a concession for $5,000 to $8,000 per transaction, which helps for their CAC to close being less. It helps them to reduce their closing costs and or helping them, as you said, rates mid 6s to 7%, maybe using that to buy down a permanent rate down into the low 6s.
And money up front for a lower interest rate.
Yeah, so as we know, most buyers are sensitive to what's my payment going to be and how much cash do I need to bring to closing. So when you're dealing with first-time home buyers, those are the two factors that come up. And you don't want to sound like a used car salesman, like where do you want your payment? So it does help where you can bring less cash to close for the consumer, for the buyer.
Sure.
The 2-1 buy down is typically going to be about 3% on average of the purchase price. And what that would do, so if you did a 2-1 buy down, if the interest rate was at 6.5%, year one, the rate would be 4.5%, year two would be 5.5%, and then year three, it goes at the rate you were pre-qualified or locked in at 6.5%. So
ease into that. Yeah.
It allows you to have potentially on average, maybe your payment is $350 cheaper year one, then maybe $160, $165 year two. And then you go back to it with the hope of, and I was never a big advocate of marry the house, date the rate, because we don't know what interest rates could do long-term and or what equity could be done in the property. But this does give you a little breathing room for the first year or two that allows your monthly payment to get a little bit lower as well.
Sure.
And for that, the seller pays for the 2-1 buy down. So that would be part of the seller concession, which that's where I come into play, working with you and or other realtors to really tailor what's most important. And we look at how long the house has been in the market for, to see exactly how we can come up with a great game plan for the buyer.
And that's a good way to put it, as a game plan. And it takes sort of a team of people to do that, to look into what is the personal financial situation of the buyer, what are they really trying to accomplish, and then how are we going to do that through the home that they find that they want to purchase, because then you've got to go negotiate the deal still. And so there are a lot of moving parts to make that work. So I love it. And then who are the people that you're seeing that are taking advantage of this marketplace? Because my assumption and hunch is it's not the person who bought in 2021 or 22 that's got a 2.5 or 3% interest rate. It's somebody that maybe wasn't able to lock in a mortgage with a home at that point. Therefore, now they're still looking. So yeah, what does that look like from your perspective?
We're seeing, I mean, probably on average, first-time home buyers, probably the most I've ever done in my 23 years.
Yep.
So what a great time to purchase that you have. I call it leverage, right?
Yep.
So the buyers have leverage. They have the ability to make what they want in one which way, either lower purchase price or get a concession to be able to do it. So we're seeing a lot of that. But we're also seeing, Jeff, a lot of people who sat on the sidelines that they didn't want to just jump in because it was a seller's market. And you were there, 30 offers in 1 hour.
Pure chaos.
It was chaos, right? They were giving away free tacos for a year and naming their baby after them. So it was challenging. So we are seeing people who realize they rented, but now they can take their time and really figure out where they want to live as well. But we're also seeing people with those rates at the 2.5% to 3% that have a ton of equity. Start seeing people looking to take out HELOCs, so home equity lines, fixed second mortgages, where now you're seeing people looking to take equity out to potentially purchase second homes, investment properties, and/or another primary residence, so they don't have to sell their property to use their current property as a rental. Because if the rate is 2.75, the being able to rent their current property out for more than a mortgage, they're going to make a little bit of money on that as well. So
take advantage of that. And give me an idea for, does it need to be, we don't need a rate specifically, but compare HELOC rates to primary residence mortgage, like 30-year fixed rates. Are they close? Are HELOC a point over, 2 points over?
You're going to be a point to 1.5 point. All credit driven, of course. All loan to value driven will determine what you're going to have. But the HELOC's great because you could borrow 100 to 250, whatever your sweet spot is going to be. But it's interest only, so you have the ability to draw on. It's a big credit card. Use that. So we're seeing more of that for people who want to do renovations, adding pools or whatever, not to get rid of that 2.75 or what have you. You know what I mean? So it's just hard to get rid of that. I call it the sexy rate, right? Yeah. But people have a lot of equity, so they want to tap into that either for debt consolidation, home improvements. But we're starting to see it where people are using the home equity or home equity loan to purchase another property, then sell their other property or keep it as a rental. So probably in the last 30 days, my phone has rung more for home equities, just for, you're at a Christmas time, you're in the buying season. Typically March 1st is when the buying season really hits off. So we're seeing a lot of that too. And then another thing we're seeing a lot of too, as we talked about earlier, is people who are on the sidelines were people who were self-employed. So we just did a big update for our company, our employees. We're doing more bank statement loans. We're doing more 1099 loans. People who technically make money, but when they file their tax returns, maybe they try to show the bare minimum for taxes. So doing bank statement loans, the rates are really aggressive. Putting down 20%, if the consumer has that. It's a really great way with this market, with the inventory so high that you have the ability to buy stuff. Is people say, well, I don't show any income. So my biggest thing for right now is educating, past clients, current buyers, as well as agents, letting them know, like, hey, send them our way. There could be an option that maybe they don't know about, that they don't think they can qualify. So we're doing a lot of that, Jeff, right now.
I see a lot of that with small business owners, independent contractors, where to the point, maybe they're making money, but not really. They're writing off a lot of their income, therefore it's not popping on their 1040 tax return. It makes it a little bit more difficult to verify. But like you said, there are options. So let's not think right out of the gate that you can't go get a mortgage just because you're self-employed and don't show a ton of income on your tax return. So that's good. Well, I don't want to keep you all day here, but this has been great, super informative, both for me and I'm sure for those watching too. Anything else that you're seeing in the market or that's worth mentioning here?
Yeah, I mean, as we said, it's a buyer's market. And when you have in a buyer's market, you have control, you have leverage to be able to do it. So the biggest factor, I tell everybody, who you work with matters, right? Making sure, as you said, a game plan, right? Making sure who you work with in this environment and make sure they have all the tools in the tool belt and the realtor to do that is super important as well.
For sure.
And then make sure you do shop a little bit, right? So as of right now, I love credit unions. I love banks. I got my start there too. So sometimes making sure you have somebody who has a lot of different options is very, very important as well. And then just make sure they're consistent with what they're doing, right? Talking FHA, talking conventional. In my 23 years, probably the last 18 months, Jeff, is probably the most FHA loans I've ever done and my team's ever done.
Yep.
Just because it may be the best benefit for the consumer at that time, because the interest rates on FHA are actually lower than a conventional basic scenario as well. So don't fitting everybody into a certain box to do it as well. But the outlook for me is I think we're going to have a really good second, third quarter of this year, and knock on wood, at some point these mortgage rates are going to come down, right? So if it's fourth quarter next year, if it's first quarter, but it's one of those, if you find the right property and you really enjoy it, it's in the right spot for you and your family, take a shot at it, take a swing at it, and make it happen. So
love it. So if someone wants to get into contact with you, how would they reach out? Phone, email? Like what's the
easiest way? Like, I'm addicted to my phone like everybody else too. So the easiest way, like in this day and age, people like to text. So text, call, email. I'm like 7-Eleven 24/7. So we work through it. But phone and text is
what's your number and email address, and we'll
phone number 904-333-0390 and Chad at firstdownmortgage.com. And you can see our website too, is firstdownmortgage.com. And of course there's an apply now link and all that as well. So
love it. And if anybody has real estate questions, Jeff at pursuitrealestate.com or 904-405-1995. Chad, this has been great. I appreciate the time.
Awesome.
Thanks so much. And we will catch up soon.
You got it. See you, buddy.